The stock market can feel like a massive roller coaster, and it can push a lot of regular investors into full blown panic. But what's really interesting is how people react to this stress, specifically when it comes to the professionals they trust with their money. Are financial advisors doing enough to keep their clients calm during tough times in the market, or are they falling short when the pressure's on? That is our topic for today. Before we jump in, I just want to introduce myself for anybody who's new here. I'm Lisa. I'm a financial advisor. So I am going to be one of the ones that we're going to be discussing today. I help people get to financial freedom as quickly as possible. And working together, we go through common mistakes and try to avoid them so that they can get to their goals faster. Okay, so why I'm bringing this up is an article that I read on wealthmanagement.com. It was written by the executive editor, Diana Britton, and she broke down a J.D. Power Wealth Intelligence report that looked at how investors feel during market turbulence. Now, this article was written back in April 2025. I'm recording this in almost June of 2026, halfway through the year. I can't believe it. But I thought it was still worth discussing. It was an interesting snapshot at a time that wasn't that long ago. Maybe you remember how you felt during this. Now, remember, April 2025 was when the tariffs had been announced very recently, and the market had a big pullback, to say the least. So you got to keep this in mind as we're discussing it. However, I think it's worth discussing because this is not the only time that this has happened or will happen in the future. We will have more events that will make the markets pull back, or the markets will pull back just because that's what markets do. Markets go up and down, hence the roller coaster. So let's take this information, learn from it so that we can do better, in the future. So in her article, there was some bad news, of course. Let's start with that. So a whopping 56% of investors surveyed said that the current market was the toughest investment climate that they've ever experienced. Ever. Let's let that sink in for a second. We've had some crazy economic cycles over the last couple of decades. 2008, COVID, just to name a few. I mean, for half of the respondents to say that April 2025 was the most challenging it's ever been shows how short-lived that emotion can be. We can be scared out of our minds one moment and totally forget about it in 2-3 months. I have noticed that being a cycle. So just keep that in mind. Try to remember how you reacted in 2025, April 2025, I should say, and keep that in mind while we're having this discussion. Because of the intense pressure that was happening in April 2025, people felt like they were left in the dark. The report found that 31% of investors felt completely uncertain and felt like they weren't getting enough support from their advisors. Another 7% were just frustrated because they weren't getting any guidance that they needed, and 10% just weren't quite sure. So when you add all that up, nearly half of all managed investors experienced some level of doubt or frustration with the guidance they were getting from their financial professional. Now, let's be fair. Us advisors are not just sitting on our hands most of the time when stuff like this happens. The data shows that the majority of advisors are trying to put out the fires and help clients. About 57% of them were reaching out low-touch methods like texts, emails, letters. And about 56%, I'm guessing probably the same people, but you never know, were using high-touch methods, meaning actual phone calls, video chats, or in-person meetings. Oftentimes, I think it's a combination of the two, and I'll get into what I do during that time, and it's a combination of the two. So despite that outreach, though, 18% of investors reported that they received zilch contact from their advisor during that major tariff announcement time. Imagine watching the markets take a dive and worrying about your retirement, your life savings, and hearing total radio silence from the person you pay to manage your money. That is a huge disconnect. And as the reports pointed out, these market shocks are a moment of truth for investment professionals. It's the ultimate test of whether your advisor can manage the human emotion and fear that goes along with money, or if they just blend into the background when things get tough. So when an event like this happens, And what do I do, right? That's probably what you're thinking. Well, I always put together a quick note, an email, and I put together stats. I might put in some articles I've read recently. And I also let them know I understand what's going on. I'm on top of it, but I also understand how they're feeling. And I do not discount that at all. I want to make sure that they know that I understand how they feel. And I send that out, but I also have links in there that they can set up times. And usually it's, 15, 30, an hour, so they can choose the amount of time they want to talk. Because some people just want to talk for a quick, brief moment and just check in. And others want to have a full review again, which is totally fine. And I really try to get that out within a few days of an event like this happening. I'm pretty sure I got it out. I think the announcement was like on a Wednesday, and I think I got it out maybe Wednesday or Thursday. I think I got it out by that Monday. So I don't hold me to that. I'm not 100% sure on it, but I really try to get it out very quickly so people don't feel like I'm hiding from them. I never want my clients to feel like I'm hiding. But I also don't want to create panic. So that's why I don't individually call everybody, because when you call, then people might think, was there something wrong? Which I don't want to create that either. So I have found that this method really helps with my clients. I'm able to do a low touch kind of method to get out there, and then able to do high touch with those clients that really want that support at that time. Some just want to avoid it and ignore it until it's done because they don't want to make a bad mistake. And I totally understand that too. So it works best for my clientele. Now, 52% of investors felt reassured during this time and well guided by their advisors. So, there are advisors like me that were, hopefully out there helping people, which is good. So a lot of professionals did step up and do their job during that time. Now, here's a really interesting aspect of the article that I thought has not been touched on by anybody really that I've seen for a long time. What about the do-it-yourselfers, the people that don't have advisors? How did they react? Well, panic hits them too when tough times happen in the markets. And it really affected a lot of people to change their strategy completely. The JD Power report revealed that 40% of self-directed investors said that they are probably likely or definitely likely to hire a professional financial advisor within the next 12 months. Now, I don't know if they did it, but that's how they felt at that moment. They realized that managing a portfolio when markets are good can be really easy, but managing it when everything is red can be a whole different beast. And they understand that their emotions can take over and they can make mistakes that can affect them 12 months, 2 years, 5 years, 10 years down the line. That happened a lot in 2008. I still hear stories from people about mistakes that they've made in 2008 that still haunt them. So I also thought it was interesting in the article, she talks about who was this, what generation was this that was being affected like this? And surprisingly, it was the younger generation. For Millennials and Gen Z that were self-directed investors, a number of them, over half actually, said that they needed some professional backup. So it'll be interesting to see if they follow through with that. I hope that JD Power will put out another report showing what actually happened, but we'll see if that happens. So what do we take away from that? Okay, so if you have a financial advisor and you feel ignored or stressed out that you're not getting the kind of service you want, you have every right to expect communication and the kind of communication you want. So I would have a conversation with them about that and find out what their mode of communication is. Are you comfortable with that? If you're interviewing somebody new, you should ask them, like, how often should I expect to hear from you? What do you tend to do during times like this? Those are good questions to ask. A good advisor doesn't just build a portfolio. We're that steady voice that keeps you rational when emotions take over. If that's the kind of advisor you want, you have to ask those questions. And even if you have a current advisor, you should still be asking those questions if you feel not satisfied with the relationship, because that's what it is. It's a relationship. If you're a DIY investor feeling overwhelmed by the market craziness that can happen, don't feel bad about that. Obviously, millions of people feel the exact same thing. Money is emotional. And your money in the markets can definitely feel like you have no control. But during times like this, I always say, remember to focus on what you can control, like savings rates and so many other things that we discuss here on this channel a lot. And make sure that your allocation and risk tolerance is updated regularly and still fits you. And one thing I would say that often will happen is I always want to go through portfolio and risk allocation during good times in the market because that's the best time to make those changes. People can kind of forget that, there are bad times and they just kind of go off, market's good, I don't have to worry about it. Changing your allocation during a downtime in the market can hurt you. Doesn't mean you shouldn't do it. Doesn't mean you shouldn't have those conversations during downtimes, but maybe think about going through risk tolerance and allocation changes on uptimes in the market versus the downtimes. Everybody's individual, but that's just kind of my point of view for most people. So hopefully that helped. I thought that was kind of interesting information. Until next time, stay strong, stay safe, be kind to one another, and we will see you in the next video. Bye-bye.